Welcome everybody to the Leaders in Housing Counseling call. Can you believe it's already the middle of November and close to Thanksgiving? Well, it is, and we are 3 weeks away from our Leaders in Housing Counseling meeting, and things are actually going quite well for it. So we are laying the groundwork, and you're going to help us think through how we can make this a more effective, more valuable meeting, and we'll talk about it shortly. We'll do. We're going to get started just because I'd like to make sure we cover everything on our call today, and it looks like we're going to have a lot of great participation. We're getting lots of slogans in, housing counseling slogans, and it's just great. Big variety. It's just wonderful. So Matthew's going to be in charge of reading off some of them that have been emailed in, and if you want to put some into the question box, let's do them, and then we're going to figure out how to compile them and circulate them, and then spend some time on them at the leaders meeting. But really appreciate all this. You guys are creative. All right. So quickly, just to run through what the plan is for today, we're going to do the federal funding update. Matthew, and then also we'll talk as well about a couple other things in the hopper in terms of Congress. We're going to spend a few minutes just giving you the highlights of what's going to be happening at the Leaders in Housing Counseling National Meeting, and well, there's lots of good stuff. So we'll talk about it, about what we've got in place already, and some ideas about other things we're working on as well, and including the arrangements for dinner that night, which will be quite fun. And then we're going to make a plug around the housing counseling slogans, so you can put them in at any time. Try to keep them short. Short and punchy is really good. Then we're going to spend a fair amount of time on fee-for-service, and we have Eric Salazar from NCLR. NCLR has been doing some pretty deep thinking about how to make fee-for-service work with lenders and how to really add some value there. And I think we're very interested in input about what people might think about what principles should be included in any kind of partnership relationship. So that should be a great conversation. At the leaders meeting, we're going to spend time with Sarah Jarik, and so want to think about what that conversation should look like, and so this could be an opportunity for what kinds of issues you think we should raise. We'll have her in a couple different contexts, so there'll be opportunities. And then an area that I've been doing a lot of thinking about elevating the image and reputation of housing counseling, and would love to get your thoughts about how to make this stuff roll out more. We've been doing some work. I'm feeling like we need to double down and make this a lot more effective. So we'll talk about the why, and then you'll help us figure out the how. We'll talk quickly about NHRC memberships and the new benefits that are becoming available, and then our next call will be December 3rd. So let's dive in. So Matthew, there's fast breaking news on the federal funding. What's happening?
Right, so the slide is actually no longer correct. So the Senate had on their calendar for today to take up the THUD bill. The bill they were going to consider was basically the bill they had moved, but then with some plus-ups for programs based on the higher spending number. I think the overall number they were working with, I think I remember seeing it was about $1.6 billion over what they had been working with in the spring, and that bill would have restored funding for home, which folks might remember was almost zeroed out. It would have upped funding for CDBG. It did not include any additional funding for NFMC. So what happened though is that bill was withdrawn kind of last minute. I guess the issue is that Senator Paul is objecting to, I guess he's not vetoing, he's filibustering, I guess, until provision. He wants amendments that would prohibit any federal housing funding for asylees from 34 countries. So it's kind of wrapped up in the refugee debate that's happening right now. So that was withdrawn. I guess it's not expected that anything's going to happen until after Thanksgiving, probably at the earliest on the THUD bill. The one other issue that we were going to flag, that's something that we've not really been pushing too hard on, but I think we are going to start to push back on a little bit, is folks remember the HAWK program that we were all very excited about. Then last year, actually at the day of our national meeting last year, and at the very last minute, they added a provision to the appropriation bill that basically prohibited them from using any of the funding that was allocated to them for the HAWK program. So that language is included in both the House and Senate bills. We're going to work on an amendment. I think Senator Menendez may be the person to work with on that, to try to get that HAWK prohibition lifted. So it's kind of all in flux right now. I think that's all to say for now, Bruce. I don't know if you want to add anything. Sorry, that was a little all over the place.
No, I mean, I think only to say critical issues are Senator Collins in Maine and Diaz-Balart in South Florida. And Matthew, you're going to South Florida for a meeting that NCLR and we have put together with the legislative director for Diaz-Balart, who's the head of the THUD subcommittee, next week, right?
Yeah, and I guess the kind of bigger picture outlook for NFMC, I mean, certainly the fact that they're not going to be voting on the THUD bill in the Senate today creates more of a chance of there being NFMC funding in the Senate bill, but it's still a very much an uphill battle to get an amendment that would fund NFMC at anything in the Senate bill. So that means that it really puts the onus on the House to stand up for that number, which is what we've been asking the House THUD folks to do. But really, it's going to be Chairman Diaz-Balart and Ranking Member Price in the House that are going to have to be the folks in conference, assuming the Senate assuming the Senate keeps NFMC at 0. Those are the folks that we're going to need to be our advocates.
So, our friends in North Carolina should really reach out to Representative Price as well, if you haven't already, around NFMC. Actually, do it again now. Today's the day. Do it this week. This is all time, and we do need more champions. It'll be a very small group of people that are actually looking at this question, and so having Price speak up would be good. Good. Do you want to talk quickly about the QM issue, and then?
Sure. So I guess the very quick context. Hopefully, folks remember the QM rule. It's been a little while since they passed it, but it's basically the provision that says that if lenders are making loans where they've made a good faith effort to verify the borrower's ability to repay, and they set out very exact criteria for what that involves, then it gives lenders protection. If the loan defaults, it basically gives them what they call a safe harbor from a borrower bringing a lawsuit and saying, this is you shouldn't have made this loan. There, in the original QM rule, there was a small exception, and it was for certain small lenders and for lenders in rural areas. The House yesterday passed something that basically would apply that exemption to all banks. So it would basically do away with QM so long as the bank is holding the loan in their own portfolio. So they're not selling it off into the secondary market; they're holding on to it. And there's a lot of kind of in the weeds stuff that we can say. I think though, for now, the important thing is that President Obama has made pretty clear that he would veto this. There's a lot of concerns that Democrats have, among them that it would roll back all kinds of consumer protection. So also included in QM is things like caps on the rates and fees that lenders can charge. So it would basically roll those back and really kind of open the door to a lot of the predatory lending that Dodd-Frank and QM were intended to to get rid of. So the bill that came out of the House yesterday certainly is a bad bill, but the Senate Democrats and President Obama certainly can stand in the way of its becoming law.
Great. So QM, of course, is qualified mortgage. Excellent. So let's move on. So we've got, we're 3 weeks away from, a little bit over 3 weeks from the Leaders in Housing Counseling National Meeting. Very pumped about it. We're actually way ahead of where we are usually at this point in terms of people signing up, and that's good. But we still have a seat for you if you haven't signed up, and you do need to sign up because we really need an appropriate count for the seating arrangements and for lunch if you're a member, and dinner if you're for everybody. So please sign up now. We'll circulate the sign up information again, but we really it's very helpful to have a good count of who's going to be there, and it's helpful to know who's going to be in the room to frame some of the discussions. So here's the quick plan. We start at 10 with a members meeting, and so members of NHRC will be from 10 to 12:45. We're going to have a quick review of the year, but spend a good solid hour with Sarah Jarique. And this is going to be a pretty kind of unstructured, any question you want to ask, everything we want to put on the table. This is going to be a candid conversation that'll really be about what's most on your mind, how you want to engage with HUD. So gives you the range of talking about problems you're having with HUD and the reporting systems, talking about policy, talking about the issues that we should be working on, or we can go big picture very quickly, which, as you all know, Sarah's very comfortable doing all of those, doing the spectrum. So the whole idea is that it's going to be a little bit more informal and a little bit your ability to be going sort of face to face with her in a conversation that works for all of us. So that'll run from 10:30 to 11:30. At 11:30, we have invited in. We're waiting to hear Mike Stegman. He's the White House chief policy person, and he's. We're waiting to hear back if he can join us. We've got other people in line if that doesn't work, but it should be high content conversation. Stegman is in the middle of all the major housing questions that are happening right now in the administration, and a very bright guy to sort of deep knowledge, but partly I think he needs also to hear from us that they're not as versed in housing counseling as one might have expected, though they're very supportive. So our job is to expand and make things bigger. One of the areas that I'm interested in is this whole conversation about how to incentivize housing counseling, and we're also reaching out to the FHA Commissioner, Ed Golding. The two of them together are kind of intrigued by this question about what incentives might look like, and this conversation might go beyond HAWC and what other tools there are, particularly through Fannie Mae and Freddie Mac. So we'll see where that goes. Lunch is being provided by Citibank. Thank you, Hala Farid. And then the bigger open meeting starts at 1. We are going to get HUD update and overview from Sarah and her team. We'll see if they can talk about certification, but there'll be a variety of other issues that we want to engage on. We will have an hour conversation chaired by Doug Dilla. Hopefully you know him. He's a longtime housing counseling person, did a lot of work in the early days of NeighborWorks around developing their delinquency and foreclosure programs. He's been a housing consultant for a long time. HUD has actually hired him to be part of the team that's doing the evaluation, and Doug was the person who helped put together the intermediaries meeting that HUD convened last summer. So someone with deep knowledge, and the idea is, what do housing counseling agencies need to look at beyond federal funding? So going to bring in a variety of different resources and resource people. Should be a great conversation, and we also hope we will prompt some feedback from you all about what you're doing in the field as well to broaden people's set of tools. We'll spend some time on this question of the slogan and try to figure out how to start getting some ideas that work for the group. We are going to have a fairly deep team of people talking with us about housing policy, and that team will be represent some of the people in the DC area who are really working on not just housing finance reform, but some of the bigger issues around access to credit. And we're hoping that this will be a helpful conversation the same way that last year's was, where it's us hearing from people who are outside of our profession about what we need to know and act on in the context of our work. So it should be pretty good. Struggling with the question, I've got Aaron Dorfman lined up to come. He's the head of the National Committee for Responsive Philanthropy, and we've got some special benefits from them that NHRC members are going to qualify for. And it's only a question if we have enough time in the schedule to include him. If not, we'll have him come out on one of the leaders' calls and manage it that way. And then in the evening, we're going to have dinner. Matthew, do you want to give us a quick rundown of where are we going to dinner exactly?
So we are going to a place called Del Campo, which hopefully DC folks have heard of. I've not personally been there, but everything I've seen and read about it makes it sound great. I guess it was named one of the best new restaurants in America in 2013, and it's very well regarded, I believe. We are going to be doing, so there will be past hors d'oeuvres, which should be very exciting, and then we'll also do a carving station. We've reached out to folks who have RSVP'd to make sure that we're accommodating folks with dietary restrictions or allergies. But yeah, it should be a lot of fun with great food and drink and good people and networking.
That's right, dinner and drinks. So there'll be a dinner and drink reception. It'll go from 6 to 9. Ocwen is paying for it, and the senior management of Ocwen will be there to talk, which they are actually pretty interesting. I hope we'll have Hala stay with us as well, and then we'll invite in the people from HUD. So this is viewed as kind of a networking opportunity, so that you'll be able, really the bulk of it will be for you to hang out and visit and connect. We'll take a couple minutes. It was a blast last year in the brew pub, but you couldn't hear a thing if we tried to talk as a group. So we'll take a few minutes at this one, and we think we'll be able to hear a little bit better. But really the main goal is for you to have a chance to relax and get together with others. So this is our one time a year that we really get together as a group. I'm very excited about it. I'm really appreciated the contributions and energy people have already put into this, and we will keep working on it, including this call, which is partly to develop more of the content and opportunities in the meeting on the 10th. So even if you're not coming, please, though if that's a mistake, you really want to come, but even if you're not, please feel free to contribute here. We are really trying to make this all part of what works for the housing counseling community across the board. Okay, so with that note, let's move on to the next item. So it says got milk, and that's the idea, is that let's see if we can play around with something that's a slogan that catches people's imaginations. And think of it as something that's a billboard, that's only a few words, and is something that people can either understand or get to understand pretty quickly. I think got milk doesn't make sense on its own right away, but the minute you have a little bit of context, oh yeah, okay. And so that's what we're looking for. And We're going to do a lot of brainstorming, and we will, and we're going to, I know we've gotten a great response already, so in a second I'm just going to have Matthew read off a few examples of what we're getting, and during the course of this call we're going to jump in and get more feedback, and then we're going to figure out some way for more and more people to contribute to this, and then hopefully bring this up into a deeper conversation at the meeting on the 10th. So Matthew, do you want to give us a couple highlights we got from the list?
Sure. We have quite a few, so I'm not sure how many you're looking for, but why don't I just
a few
start
right now? Yeah.
Okay. I believe the formatting's a little off, but I believe this is from Teresa at Beyond Housing. What's your net worth? From Jeremy Montanti, excuse me. Your Guide to Homeownership. From Alice Yeoman, Your Options, Your Way. From Donald Stafford, Let's Do Some Home Work with home in quotations. Anne-Marie Drapeau, Let's Talk Housing.
Good. Okay. So let's talk housing. So let's keep these ideas coming, and thanks for being creative. So let's move on to fee for service. And one of the areas where I think we have done, housing counseling agencies have made progress in terms of getting some payments from some lenders on fee for service. And there's two discussions. One is around consumer fees, and the other one is around lender fees. And we're going to start with a conversation on lender fee for service, and particularly that's because we've been in conversations with people from National Council of La Raza about their thoughts on lender fee for service, and a way to start elevating this into a more systemic approach to partnerships with lenders. So we've got Eric Salazar on today, and is Eric, oh, we don't have Eric. So we may not have him at the moment. So let me just check here. So looks like, so let's, I'm going to, well, I'm going to get started without him then. And here's the short of it is, we are, one of the ways to think about fee for service is that it's really about a relationship, that it's not just about a fee partnership, and that the way I think that NCLR folks have been starting to think about it is that you have an agreement that has a certain set of terms of operation, and some of them have to do with what the payment amount would be and what you're getting paid for, and some of it has to do with what you're delivering to the lenders. And that the idea here is that we have the ability to start saying, well, we're going to do these things, and in return we're looking for this kind of payment, so that it actually has a specific funding amount, and maybe larger than what is typically done, which is anywhere from $100 to $300, and that we deliver a product of a fairly high caliber of value, and that product is looks at being a well-packaged mortgage and a well-educated mortgage application and a well-educated buyer, and that there's some cost efficiencies, some cost reductions for the lender as a result, because the borrower is less likely to need to be declined and less likely to need to be worked, and less work needs to be done on fine-tuning the package, because it's all in one place and done. And that, and I know that Lot Diaz and Eric Salazar and others at NCLR have been working on this concept of maybe creating a platform to make it easier to deliver well-packaged mortgage applications to borrowers, to lenders. But all of it, one way or another, kind of fits into the idea that you are you are reducing the cost of originating a loan for the lender, and because we're providing a service of a loan that's well packaged, less likely to have delinquencies, less likely to go into foreclosure, that there ought to be a compensation for that. I think, I don't know where NCLR is landing on this. I think the number $500 has been kicked around, but the kind of the bigger conversation here is that there ought to be a more systemic view of how to deliver these loans and packages. And the idea might be that it's not just an NCLR project, but that in marketplaces, we as a community adopt a set of principles that says this is how we're doing business, and this is what we can deliver, and this is what we'd like you as a lender to do in return. And the idea is to socialize this and to make it so that it's not you kind of struggling by yourself to convince a lender who might be giving you a modest grant, but instead that this is how business gets done, and as a set of standards. And I think we should think about what should be in the principles, what should it make, what should we get that will be credible to the lenders who are actually working with us. And I think the concept would be it would work for big lenders and it would work for small lenders as well. It's really kind of a marketplace way of doing business, so that we all have the set of principles. We have something that's printed out and is kind of clearly established. So I'm going to pause here and see if people want to weigh in on this. If there are ideas of what should be in the principles, if there are ideas about whether this is a good idea or a bad idea, if what your fears are, what you think are the strengths, all those kind of things we're happy to talk about. And I guess we should give people a little bit of time to put things out there. So
we do have a question and a comment.
Okay, good.
So the one comment, just kind of building on what you were saying, someone said that they were having a conversation with a loan officer recently, and the loan officer talked about how much easier it is to work with borrowers who have had counseling, because they know all the paperwork is going to be in order, everything's going to be filled out properly, so that it makes the life of the loan officer quite a lot easier. So there's obviously some value there. And then I guess a question specific to the NCLR program, which maybe you can answer. I will also just say, Eric, it looks like you're on the phone, but just haven't put your audio pin. I don't know if you're having an issue with it. Sometimes it's happened before that it wasn't accepting it, but if you haven't, just try hitting #125#, and if that's not working, you can hang up and try calling back in. But so the one question is whether and I guess this is the NCLR program, if you're looking at tiers similar to NFMC, such as initial package and at closing. Is that something you know the answer to, Bruce?
So I don't know what NCLR's view on this is. I think one thing I've heard is simplicity is valuable, but I think you're also raising a couple.
I'm sorry to cut you off, but we actually do have Eric now. Yes, we can.
Good.
Okay, great. Sorry, I've been trying to
chime
in for a bit now.
Welcome, Eric. So maybe why don't we pause and do you feel, are you ready to talk for a few minutes about the NCLR approach?
Sure.
Good.
Yeah, so we've had several conversations actually about a sort of a national initiative with a few banks. So Bank of America, Citibank, and TD Bank, right? Just to name a few. There were a couple of others I can't recall, but there was three things that as I was listening, I was on the call, there was three things that really opened their eyes, right? The first was, obviously bringing efficiency to their current process. So what are we bringing to that process, and how can we quantify it, right? Time savings, less time spent with unqualified clients, right? There's a market value to what we bring. We're bringing a better prepared low to moderate income market. It's a trusted entry point for many clients. So when the lenders are ready to kind of widen their credit scope into the 620 to 680 market, as they prepare those types of products, we could be primary on their minds if we present ourselves in that way, right? And then, of course, we are helping their mortgages be more successful because they've got counseled clients, right? What we started with, and I agree with the point that you made, one of the things that we had to do was to make sure that the pricing is something that's very simple, right? So we
Eric, we just lost you here. Eric? So Eric, we can't hear you at this moment. So Eric was making the point that pricing was simple, and going back to the call that came in, we could think about tiered, and one of the interesting things about
as soon as we hit that first sort of home run, right, and get that lender in place.
Eric,
yeah.
You were offline there for a few minutes, so why don't you start back on where you were talking about simple pricing?
Right. So we in our conversations with the lenders, we brought on just one price for now, right? We're getting nothing at this point, so we started at 500 with the understanding that that may not be the value that it should be, but we don't have anything to fall back on to show them the value of what we're bringing to the table. What we do have, again, is what's going to be happening, right? So we're bringing efficiency. They're saving time with better prepared clients, and we're giving them access to a market, right? But then what they've come back to us with is, so can you give us some projections on how much? How many clients can you bring across a certain time period, right? And that's the big hurdle that we're looking at now. On top of course, them developing their products. They've been holding off but they let us know that the moment that they bring their product bring a product that's for the LMI market, that they're going to look to reach out again, right? The important piece being, yes, I would say one flat rate, right, and with the option to prove to them of the value that we're bringing and increasing that at a later point. But right now, we just need one success, right, and then uniformity. So for everyone to come in with the same message and have it be something that we've all agreed upon, and to the degree that we can coordinate. So for them, it's a lot of it is about, can you see the client right away? How long is this process going to take? And are you able to connect with our portals or systems in a way that brings, maintains privacy and maintains the efficiency that they would have if they worked it on their own? So to be adaptable to their processes to the degree that we can was also of utmost importance to them. So those were some of the things that we were looking at to address with them when we go back to the table.
So I think this model. So when you describe things like, can you see the client right away? It sounds like you're assuming that some of the business will be generated by the lender and sent to the counseling agency.
It's both. Yes, that's correct.
Both, which I think is a very viable model, and Acorn Housing operated with that in mind. We did 110,000 mortgages over the course of 15 years, and those and it's multiple streams of how clients come in, but having the lender be one of those streams is helpful, and not necessarily just the most problematic loans, but loans that might be have a represent underserved markets or lower down payment or things like that, so that you're getting a good mix of who comes in.
Right.
Very interesting. So, but it's not in effect at any place right now. Is that right?
No, not yet.
Okay. So we're kind of at the ground floor in this conversation. And did NCLR have any specific principles that they were requiring of the lender?
Basically, it's a $500 minimum fee. It was one, right? And just one access point to their agency, or at least one unit. So not multiple access points from different branches, but one specialized unit that would be working with us in order to process these, to make it obviously a more simple process, right? And those were the two big ones, right? And then
right.
Yeah, that's so single point of access for us to them, and them to us, actually. And then there's a lot of privacy, obviously a lot of privacy issues that needed to be addressed with how we exchange documents and all of that. So.
And so when you say access point, you're meaning kind of the underwriting team and the back office people, or are you meaning
correct.
The originators?
That's correct. The underwriting team.
The underwriting team. Yeah, well, that makes a ton of sense. And then you can establish relationships and people can understand the underwriting.
Exactly.
Oh, you can't.
Sorry, it sounds like we're having some ongoing audio problems. If folks could just bear with us for just a minute, hopefully we can get Bruce's audio back. Bruce, you want to keep talking and see if?
Sure, yeah.
No?
I was only saying that...
no, we still don't have you. Sorry, folks, if everyone could just hold on for a second, hopefully we can get the audio squared away.
Should I switch phones with you? Yeah. Okay, well, so you can hear me okay now? Oh, we have no idea. So I think the point was just quickly that underwriting gets done by a common team that becomes familiar with both the populations, the underwriting, and the organizations, and the flow, so you're not constantly trying to educate the servicer, the underwriter, about how to do things and the subtleties of the marketplaces we're working on. So that's I think a very, very helpful piece to all this, and one that could be huge for our community. And any conversation about pricing? Any thoughts about that?
We had referenced with them that we would start at 500, right? But
no, I meant on the loans. I meant on the mortgage loans. Any thoughts about pricing?
For sure. Yes. Yeah, we were looking at interest rates, right? The total down payments at 3% or less, hopefully, right? Whatever access they can provide us, and interest rates at 4%, if possible. So down payment and interest rate were the two that we were discussing. And of course, I mean, there's going to be some competition going on. We also looked at the ITIN, the potential for ITIN borrowers, and the ability for them to allow access to that population. But yeah, those were what was talked about.
Good. Well, it sounds very exciting. So here's a principle that I would encourage to include, which is just a flat statement in the description that the housing counselor is an independent third-party advisor to the home buyer, and not an employee, or not a employee is the wrong term, but not beholden to the lender. That independent advice and relationship is critical to the relationship, and trying to build that into any contractual relationships we have with lenders and servicers is kind of an important piece here, and we want to get lenders to think about that as a plus.
I agree. That's a good point.
Good. And are we getting any people writing in?
No, I just can't. I don't have audio on here.
Well, let me hand you here.
All right. Sorry, everyone, for the audio problems we're having, but we do have some comments, and maybe hopefully Bruce's phone is working again. I'll just quickly run through some of these, but kind of big picture, someone just highlighted that if NFMC goes away, then fee-for-service is going to be a much more important component. Someone had mostly a comment, a little bit of a question, saying basically that lenders do like to work with them, but in their experience, they don't want to fund anything, and thought they would be reluctant to unless it became kind of a standard. But I think we've kind of addressed that somewhat.
Well, I think that's the point. We established that.
Yeah. So I'm just going to read through this. We think a lender fee for service, but there are some challenges in smaller, more rural markets because their workload is not as high, and there's a culture of wanting to establish the personal relationship with the borrower versus having a middle person. We have great relationships with our local lender representatives, and they support housing counseling and home buyer education. So we've been more successful at developing sponsorship relationships. So maybe that's something to think about in relative to different markets, and maybe there's that's more relevant in smaller markets or rural.
Well, I mean, part of the issue is going to be that you create a competitive climate, and so it'd be very cool if we could say we can roll this out across the United States, but in fact what may happen is that we may set the standards in a number of markets and then grow it out. So got to figure out where there's I think NCLR may take the lead on this, but I think a lot of groups can come together on this. We may be able to establish the standard in a marketplace in a Baltimore or Philadelphia or Cleveland or wherever. So that's part of the idea here, part of the conversation, and part of what the conversation might look like in DC on the 10th.
Great. There are a few people that kind of flagged / asked the question about I guess the steering and kind of the issue of getting money from a particular lender and not others. Is that something folks want to address?
So yeah, a lot of questions have, this used to be a big issue many years ago, and under RESPA, paying for housing counseling services is now is an acceptable set of services in the same way that paying for an appraisal is, or home inspection is an acceptable set of services. And we're happy to sort of check in with HUD about if they have any problem with us talking about pricing standards, but they've never raised that issue with us before.
Just a couple other questions. Someone asked what the response was to opening the market to ITIN borrowers.
So TD Bank was open to the idea. Bank of America and Citi not so much, is what I would tell you.
Okay. Somebody else asked about mortgage insurance.
We're trying to eliminate mortgage insurance in our ask. MIP?
Yeah, so and that's very valuable. So and really does provide a competitive advantage.
And the last question is, somebody asked, at what point the counseling agency is paid? Is it at closing or is it prior to closing?
It's at closing, yeah.
Great.
So one of the things that Bank of America does is actually they pay currently with groups they have partnerships with $300 per application as opposed to per closing. And again, you're paying for the service in the same way that you're paying for a home inspection. So whether the house closes or not, you pay for the home inspection. Same thing with the application. And it gets away from that question of referral fees. So something to think about in terms of how we frame this. Because certainly the costs for us as agencies is pretty close to the same, maybe a little bit more to bring a house to closing, but the bulk of expenses are way ahead of that. Well, this is fascinating, and you know, we'll definitely we'll want to keep this conversation going, and definitely do this on the 10th as well. So, Eric, you're welcome to hang on here. We're going to move on to a couple other topics that will cover our work. But Matthew, do you have a few more slogans you want to share with us?
Sure. We've got Welcome Home. We've got House Keys. We've got a Counselor. Counseling Works. Housing Counseling First. Home Ownership and Stability Always. Home of My Own Counselor. Homebuyer Training Works. Housing Counseling, The Road to Home Ownership.
Cool. Okay. So let's see. Let's scroll down onto the next topic. So can you switch slides here? Yep, just something here. Oh, here we go. Okay, so so we're going to get time with Sarah, and as we all know, this is always very valuable, but she really does elevate the conversation. So very interested in what you're thinking we should have as conversation topics with her, and so you can certainly email these to me directly, or you could put them in the question and answer box. I think we will. So to be realistic, I know certification is on all of our minds, and she's not going to be able to talk about that because of the rulemaking procedure unless the rule has come out. And I think I talked about this in the last call last week, 2 weeks ago, when I said, well, you know, rule will probably be done by then, right? Got dead silence, and so it may not be ready by then. But I think we really want to hone in on those frustrations and concerns you've got with HUD these days. I think we all can say that there's been some progress on a number of these fronts, but they are not out of the woods yet. So this is a great opportunity to have a supportive conversation where you won't be by yourself on these things. We are, and if you're not comfortable asking them, you can have me ask them, because I'm totally comfortable with asking all these. And let's make the most of the time we have with her. So you can be very specific, or we can be also very large. And you know, as you probably are aware, I tend to like to go large, and I think there's in front of us really big questions about how we package housing counseling in the future, and what are the viability models in terms of funding housing counseling, but also in really kind of solving how people come to us and become a long-term sustainable business model. So each time we talk with her about this, and because of her observations and her deep knowledge of the industry, she often brings in lots and lots of insight. So, so Matthew, unless we've got people who want to weigh in, do we have? Matthew's checking right now.
Oh, okay. The Ellie Pepper had raised the Housing Counseling Advisory Committee.
The committee to right. So yeah, it's interesting because the Feds committee has already been selected. So theirs is moving slowly. So I don't know anything about this, but certainly we can ask her in December, and if there's information about it beforehand, we'll circulate that as well. You know, and these we can also bring up the kinds of issues we brought up with the HUD task force, and I will say that we've had our ability to test the point of contact system where we appeal to Phyllis Ford, and we've done this a bunch of times now, and I think we are batting 100%. I think, please, I know you'll email me if I'm wrong here, but I think every problem we've brought has gotten solved, and gotten solved in a way that I think all of us feel comfortable with. And if not, let me know, because I get a call right away when we reach out on issues. So things are working there, but obviously there's more we can do. So, do you have some more slogans?
Sure. Homebuyer training works! Exclamation. Housing counseling. Oh, I think we did housing counseling, the road to home ownership, which I actually like. Housing counseling matters. Housing counseling helps. I think that is all we've got for now.
Okay. So nobody did ask a counselor or consult a counselor, huh? Just think of what you could put on the top of a hat. If you wore a hat and you put it there, 2 or 3 words that, that's the great thing about got milk. Big, bold letters, jumps out at you, and easy to recognize from a distance. So, but this is good. Okay, so we have this whole question about how to elevate the housing counseling image and reputation. And I think, as you know, we've talked about this before, the big challenge is how do we get people to think about calling a housing counselor before they call a real estate agent or a lender? And how do we socialize? How do we normalize our profession and make it so that people, without spending a fortune, without having a giant got milk or Geico lizard campaign, gecko campaign. So one set of thoughts has been, can we get the administration to use the bully pulpit? And it turns out we've heard that there's now a bully pulpit conversation going on inside the administration. So we're very interested in being part of that conversation. One of the proposals we have made, which our own Matthew Gaudreau came up with, was that during the State of the Union address, that there be a line about housing counselors working with families to help them buy a house, and that we have a housing counselor and a client in the audience, maybe sitting close to Michelle, or that's a lot to ask, but who knows? And if we did something like that, and maybe what we could do is have agencies all across the United States, your agencies, ready with news releases so that the minute it goes out, you shoot out emails to newspapers and media outlets in your community, to the radio and television stations, saying, we're an agency that's doing the exact work that President Obama talked about in the State of the Union address. Here's our information, and people should feel free to call us. This is the first time that housing counseling has been mentioned in a State of the Union address, and see if we can't get some buzz on it. And then for those of you who are into this stuff, you could tweet it, you could Facebook it, you could social media it, you could, I don't know, do you Instagram it? I don't know. You guys know better than I do. But the idea would be, let's create a ripple effect. I think we're interested in something that's not just a one-time hit. And we have gotten, as you know, Secretary Castro out to at least 3 housing counseling agencies that we know about in the past year, and try to make more of that happen. And President Obama did go in Arizona to an agency, though I kind of wish there was a little bit more emphasis on housing counseling. Somehow apparently the prep bullet points were excellent, but they didn't quite make it into the final presentation. We're not sure where it got lost in the message, but we're going to take more shots at it. So if people have, so I'm sure you've got other ideas. You're a creative bunch. Who, what, where? How do we kind of get more of this front-end information about our housing counseling work? And we're certainly going to do Google AdWords in 2016. Looks like we've got a good group of counseling agencies that want to move forward on this. We're going to keep rolling with those ideas. We're a little bogged down right now with the funding questions, the federal funding questions in our national meeting, but we'll get this rolling soon enough, and certainly by early next year we'll have our committee up and running, and we'll be able to trade ideas and messaging. And that fits into all this, but I think we need a good deal more. We need to figure out how to make this into a bigger, broader messaging piece. So do we have more people commenting or slogans? We've got a few more. Got a housing coach question. Build credit muscle. Got home question. And get home. Get home. Oh, get home. Interesting. Yeah, cool. Get home. Fascinating. Yeah. Tough. Okay. So, well, see, we're a lot of creativity out there in the field. That's exciting. So let's see. Please think about these things. We're going to shape our meeting on the 10th based on what you are telling us and what the opportunities are. So, think about it this weekend and shoot me some emails. I love getting this stuff, and occasionally it's just I'm saying thanks, Maria, because you sent something cool, but really, we really do read them. We really do think about this a lot, and it really does help shape our agenda. Doing actually a lot of work right now on servicing standards, and Melly Pepper's been involved in these conversations, and many others of you. The survey has come out, and Matthew will soon have a final draft that we can circulate with the groups, but the information is very, very useful, and want to do a quick shout out of appreciation on the people. I know it was a long survey for us, and we appreciate the time people spent on it, because it's really, really proving to be valuable. And we will have this out shortly, and then we'll get it to the CFPB. So along those lines, so here's some interesting things. So becoming a member of NHRC, we have a new benefit that's about to roll out, and it's again through the Committee for Responsive Philanthropy, and they are providing us with an opportunity to get directors and officers insurance, and their sense of it is that it will be substantially cheaper than what's available to groups currently. So I don't know. I haven't seen the numbers, and I have a very small organization, so we're going to find out. But if it's valuable to you, we are very, very interested in promoting it to all the NHRC members. And this is the group that also has provided us now with access to the foundation directory, which of course is that guide to foundations across the United States. It's the one complete guide that has. Two of you wrote me, oh, I no longer have to run over to the library to look at this. I can now get it at my computer. So that warms the cockles of my heart, and we're glad to do these things, and we'll look to add more kinds of things of value. We're looking again at credit report fees and trying to figure out ways to save money for people on the credit report fees, and we'll probably bid something out to providers shortly. We know that there's a lot of pressure on that, and the prices are jumping up. It's actually Equifax is jacking up the prices, so would like to have an impact there as well. But please think seriously about joining NHRC, and certainly if you want to be a member, if you're going to join now, because then you can get into the members part of the meeting, and this will be a great discussion. It's terrific. You'll get some FaceTime with Sarah. You'll have some other policy folks, and we will do we'll have a good lunch. But it's kind of the longer-term relationship that really supports this work. And 25% of our budget is provided by membership dues, and gives us the independence that we need. So with that, I think we're going to close it out. Appreciate all that everybody has contributed here. We'll figure out how to circulate these lists, and it'll be we'll figure out if there's some way to get a sense of the community on this on the 10th of December, and one of the elements of our meeting. So appreciate all the good work you're doing. We will be on our regular schedule. I think it's December 3rd is the next call. And we'll keep an eye out because there will be federal funding issues that pop up around NFMC. And certainly if you get a call from Matthew or an email, it's all critical to making this work. All right. Thanks, everybody, for the good work you do. We'll talk to you in 2 weeks. Bye.